welcome to our webinar today. We're going to give it a few minutes for people to get in here. But I am your host, Amy Keenan of Insightful Accountant, and we're so excited for our guests today, PayTrace, to be on here to share some great information about B2B payments. And we're excited to have them on educating you all. So thank you for being here. All right, we'll get started. So welcome again to the Insightful Accountant webinar with our guest PayTrace today. We have Mary and Sam here to present to you on B2B payments and how it all works with QuickBooks Online. This webinar is going to be recorded, and yes, we will be sending out the recording email in the next day or so. We are also offering CPE today, which there will be a poll at the end of our session asking you if you need a CPE certificate or not. So please make sure you take that poll as well as the 3 polling questions that we have throughout this session to earn those CPE credits. And if you have any questions, there is a Q&A section or tab at the bottom of your screen in the little bar. Please put your Q&A, your questions in there, and we will get to them throughout the webinar or at the end if we have time. We didn't slotted time enough for everybody to get those questions in at the end. So don't worry, we should be able to get to them all, but please put them in the Q&A so we can get to them and answer them for you. We love questions, we love interaction, so please make sure you bring it on for us as we present. And I'm going to now hand over the audio, the voice, the stage to our friends at PayTrace. So welcome, Sam and Mary.
Thank you, Amy.
Thanks, Amy. Great to be here.
Awesome. All right, so take it away.
All right. Well, hello, everybody. Like Amy mentioned, my name is Sam Johnson. I'm the Partner Success Manager with PayTrace, and joining me is our Director of Marketing at PayTrace, Mary Miller. Today, we're going to introduce you to our company and our solutions, PayTrace and Trace AR. We'll talk a little bit about our company a little bit further on, but at a high level, we are what we call ourselves B2B payment experts. We work with a lot of businesses, organizations, partners to help them streamline their payments, whether that's card payments, ACH payments, invoicing, you name it. We do a lot of things. So we're going to get into that here in a little bit. But like Amy said, questions, comments, emotional outbursts, keep them coming. We love those. But we're going to kick this off talking a little bit about some of what we see currently in B2B payments. And really, we're going to start with some of the challenges that a lot of financial professionals are seeing out there. Mary, I'm gonna throw this over to you.
Awesome. Thanks, Sam. Thanks, everyone, for joining as well. So, Sam, it's interesting. We talk to a lot of organizations about automating payments, about accepting credit cards, about understanding how that impacts the B2B world and why they should go down this path, why this journey is so important to their business. And so we wanted to start today's conversation by kind of level setting with, these are probably some challenges that many of you on the phone are experiencing as well, and or your clients are experiencing these kinds of challenges, and really think of them as the drivers behind payment and AR automation. So we're just going to talk through these. And again, please feel free to ask questions and interact, because we like to have interaction and lively conversations. So these are what we see as kind of the top 3. There are certainly others. The list could go on. We could do an hour just on challenges and trends, but we're going to highlight the real reasons why companies look to automate payments and credit card processing and their accounts receivable. So number 1 issue is slow traditional payment cycles. And I can tell you, having been an accounting manager in past lives, it is no fun to mail checks, print checks, wait for checks to arrive, wait for checks to get approved, wait for invoices to get approved. It's a very slow, tedious manual process. And it astounds me when I see the data that supports so many organizations are still processing this way, are still accepting payments this way today, especially in the US, which is where we focus. So that slow traditional payment is leading to DSO, days sales outstanding, of 28 days or more. In fact, I just read a research report a couple of weeks ago that number for many businesses now is between 45 and 60 days. That's a long time to wait for payment for services or products that you've already delivered or that your clients have already delivered. And in addition to that, it opens the door for manual error, risk for fraud, things getting lost, checks falling into the wrong hands, all of those sort of things become part of that challenge as well. So slow payment cycles is challenge number one. The next thing is a disconnected buying experience. And I don't know about you, but especially in the last several years, COVID and beyond, we all just became addicted to ordering and buying online. Not that it was slowing down before that, but it certainly became more and more of a factor as it was our main source to purchase and interact with vendors that we wanted to buy things from as a consumer. And as that transitioned back into the B2B world, we expect those same conveniences, those same payment options in the business world as we do as consumers. And so we want to have a single payment source. We want to work with the providers and the payment methods that are just most convenient for us. In fact, 7 out of 10 business buyers, once they have made a purchase online from you as a business vendor, want to continue to buy online. Once they trust that they have that experience with you and you're going to support them, you're going to fulfill what you promised, product, service, or otherwise, they want to continue to buy that way. So we want to make it easy for business consumers. We think of them as B2B to B, as it were, as opposed to consumers. We want them to have that business experience just like we are as consumers. And then finally, as a solution provider in this space, the growth in e-commerce and online payments and credit card acceptance is literally just exploding. And what we're hearing from CFOs is that as they expand their payment collections options for their customers, they're seeing increased customer loyalty. They're seeing accelerated and more efficient processes within their finance teams. They're learning that this technology that maybe they were resistant to over the years for whatever reason, what they did worked, or so they thought in a certain, for a certain period of time. They're finding that these technology options are delivering a ton of efficiency, gaining a ton of more focus time and productivity time for their often small and overworked accounting teams. They now can do things that are of much higher value to the organization than chasing paper and invoices and approvals and collecting manual payments. So adopting that automated payments and spend management process from a technology standpoint is at the top of the list for CFOs. They're looking to automate these processes and really gain the efficiencies. And they want those things to integrate with their back office, their accounting systems, which is another thing we're going to focus on today.
Yeah. And just to add to that, Mary, so one interesting point I just had a conversation with at a recent conference was that talking to a lot of the CFOs and kind of learning some of their challenges outside of this, one of the other big ones is inter-office employee retention. Which is something I don't think that we talk about enough. We like talking about the efficiency and the cost savings with that, which is extremely important, but also, right, when you use outdated kind of archaic practices, that can be painful.
Yeah.
The employee pool is not huge right now in the financial sector, right?
That's a great
So
point.
being able to have processes in place and make things easier for your staff, like you mentioned, is going to make employee happiness and retention much higher.
100%. Yeah, great point, Sam.
So I want to take this point, make sure the audience is engaged. So Amy, I'm queuing you up. We have a poll here built out, right? We're talking a lot about trends, challenges in the B2B payment space versus the consumer space, but we're launching a poll right now of the companies that you currently support. What percentage of those are B2B or even business to government, kind of fall in a very similar bucket as far as payment processes go versus B2C? So we'll leave this poll up here for a few seconds. Amy, if you want to track that and key us back.
So make sure you take the poll. Again, needed for CPE as well, just a reminder.
Absolutely.
We're not bribing you, but
we're not bribing you. No,
we're reminding you.
And it looks like A is the winner of all of them. There's a little bit in each, but A is the winner.
Okay. All right. That's
very good information.
Thank you for sharing.
And B is a close second, just so you know.
Perfect.
Very cool. Very cool. Well, it's interesting to see that type of evolution because, again, if you sell to businesses who also sell to businesses, you're going to likely continue to see more and more demand for digital payment options. And you can use this data that we're about to cover here as some talking points, some education, some insight as to why they might want to do that as well. And so when you look at the process of accepting and collecting and having paper checks be your number one source of the way that you receive payments from your customers, we see that $23, and this number is even going up a little bit, but roughly $23 to $24 per invoice when processed manually is the cost. So when you automate that, those numbers go down significantly by 25 to 65%, depending on what level of automation you implement into your organization. So consider the cost. It is not something you probably have as a line item on your budget. The cost to manually accept process payments rather, it's not on your budget anywhere, but it's happening behind the scenes. You're considering it a cost of doing business. But to Sam's point, the pool of people available to do this is small. So you want to make the best use of their time and keep them happy and productive at the same time. So another reason to automate, 48% of B2B executives are claiming that embedded payments gives them a competitive edge. Now, what that means is embedded payments within your back office and your financial systems. Lots of solution providers can offer you an independent, I can route this over here, I can approve that over there, I can log into my bank and see some data. We really want to make this a single experience, an integrated experience, embedded, if you will, within the systems that you use on a daily basis. And so they really see that that is giving them a competitive edge because they're able to do business more efficiently, get their jobs done more efficiently. So we're also seeing that in addition to that, 7 out of 10 people want to continue to buy. 75% of B2B products are now purchased online. So again, if you carry that competitive edge through to enable your clients to be on the cutting edge, to be able to compete, to be able to keep customers happy, you have to be able to enable them to buy their products and services, buy your products and services online.
And I think, Mary, this just sorry to interrupt.
Go for it.
This kind of brings back the point where buyers want a connected experience versus a disconnected experience.
100%.
So, right, it makes the most sense if you are purchasing your products online that you would pay for those same products online. There shouldn't have to be a separate process. So being able to interconnect those two together is going to make things a lot more efficient for our buyers.
Right. And think about the inventory control aspect of that. If you're allowing somebody to purchase online and you're shipping the product, but then you're also sending them an invoice that now they're going to pay in 10, 25, 35, 45 days, you're out that cash. You're essentially financing it anyway. So let's make it easy to get the money in the door. Absolutely great point, Sam. And, to round that out, 93% of organizations, of CFOs, finance teams, accounting teams are seeing tremendous amount of growth once they implement some level of automated AR. And again, you can start small. There's lots of different steps in this process. You can start small and grow as your organization is ready to take on more and more automation. But the further you get in your automation journey, you will continue to see additional success from an efficiency and productivity, as well as putting yourself in really a strong position in the market against your competitors as well.
Love it. All right, Amy, you ready? We got another one. So
I'm ready.
This one's kind of more of a pop quiz. It's one question. It's not a big quiz. But as you can see on here, we're curious what your thoughts are when you think about business to business companies. What is the most popular payment method as of today? Is it cards? Is it checks? Digital payments, ACH? Is it something else? Cash wire transfers? You don't know. Be honest. I'm very interested to see what this answer is going to be.
ACH won by a landslide.
By a landslide.
Yeah.
All right. Well, I'm sorry to burst everybody's bubble.
Credit card was number 2. That's what I'm assuming is the number 1 answer. No?
Oh man,
Check was number 3.
Oh,
all right, Mary.
So close. Yeah. I wish those numbers, I wish everybody who was on this call represented all the B2B companies that we talk to and work with and that we hear from on a regular basis, because sadly, checks are still number 1. So good for you. Kudos to everyone on this call for taking that step in the digital process. Because the other thing is that you're going to experience fewer invoicing errors. You're going to have much more consistent and transparency with your invoicing experience, with your customer experience, with your customer relationships. Again, they want to work with people they trust. And Nothing says I need to trust you more than I can trust you with my money. So really rely on that. Now, what we see in the data here is that B2B companies, again, by and large, still 63% of them still collect checks as their number one payment source. You can see ACH growing very quickly, commanding a larger slice of the pie, and credit cards, while it's just starting to grow, I think it will continue to take up a bigger slice of this pie as we see the years going forward, primarily because organizations are wising up to how that can help literally give them control over financing options, give them control over spend decisions, give them control over how do I want to receive my payments in the way that's the best for my company and for my clients. So I believe that we will continue to see ACH and credit cards take up a larger slice of this pie over time. But again, today, 63% are still accepting payments via check. So keep that in mind as you're talking to your customers about automation as well. We definitely want to make that the smallest slice of the pie over time.
Yes. And I think, Mary, when we talk about, AR automation, payment automation, things like that, one of the keys to this is removing this big chunk of the pie, this paper process, this check manual process, and really focusing on more of kind of those digital payment processes. So I know we've got this, you threw together this really great graph. It gives me anxiety every time I read through this step-by-step process. But do you want to talk about what is AR automation?
Sure. It's essentially taking the process of receiving, collecting paper checks, issuing paper invoices, and digitizing the whole thing. Now, again, I mentioned I was an accounting manager in a past life, and I used to be the one who would open the envelopes and take out the invoices and key in the data, open the envelopes and take out the checks and key in the data. It can be very time consuming. Now, I can 10 key with the best of them. Okay, I'm pretty quick at it, but there's still room for error. There's risk for human error in that. But if we look at that whole process before the invoice gets to the desk, before the check gets to the desk, the issuer of that invoice, the vendor of those goods and services, have to receive a purchase or a purchase order, depending on your system, from their business customer, right? So the customer makes the order, and then the merchant invoices the customer. And then some time passes before the invoice gets sent to the customer. It gets routed around for approval within their organization. Sometimes one or many levels of approval are required. And I can't tell you how many times I've talked to companies that receive that invoice and I take it to Sam and I say, hey, Sam, can you code this and approve it? Oh, it's over your spending limit. Okay, great. Now let me take it down the hall to Amy, see if she can, get a double signature there. It's over her approval limit. We go to the CFO. Ah, dang it. The CFO's on vacation. So it's going to sit on his or her desk until you can all relate to this, right? You can feel the pain of the time that is just being sucked out of our lives, waiting for people to approve things and code things and enter data manually. All of that happens just on the paper side. And there's a lot of other digital steps and technology steps that are happening behind the scenes to support that. Okay, so finally, CFO comes back from vacation, signs off, yes, invoice gets approved, check gets issued, check gets printed, check gets put in the mail, and so on and so forth. So when we look at that as a manual process, not only is it painful for both accounting teams, right? The AP team that's issuing the payment, the AR team that's waiting to collect the payment, and everything in between, whether they're an approver or the customer. And at the end of the day, the customer just wants their goods and wants to be able to pay for them. So when you automate that process, it goes from anything paper to everything digital. Issue the invoice digitally, issue the payment digitally, process the payment digitally, and have that transaction show up and live in your accounting or ERP system, which in today's case, we're going to talk about QuickBooks, where that lives and how it comes to life. So what we're going to talk about next and show you next is how you can automate that invoice process that lives inside of QuickBooks. Sam, you want to demonstrate that for us?
Let's do it. This is going to be the cleanest transition that we've ever done.
There it is.
There it
Love
is.
it.
All right, sweet. Practice makes perfect. So team, we've kind of set up the stage, right, to talk about how can we really make receivables so simple for us. And we're going to do it by utilizing probably the most popular accounting tool that's out there, maybe in not only the United States, but in the world, which is QuickBooks, specifically QuickBooks Online. Right, like Mary said, we could have the best AR team, we could be working with the best AP team in the world, but if we're printing out invoices and we're printing checks and stuffing envelopes, it's gonna take minimum at best like a week to get that payment processed. And that's out there. So what we're going to show you here is how we can utilize QuickBooks to make sure that that process takes as little time and as little friction as possible. So our solution, Trace AR, is a payment platform that will integrate directly into QuickBooks Online. It does also act as a standalone, which I'm going to show you a little bit here in a moment. But this is going to live natively within your client's QuickBooks platform, right? We're not using a middleware. There's not some sort of overlay. This is directly embedded into it. So I'm just going to give you an example of a very quick invoice and how we're going to send that out. I'm going to go into my customers menu, and we're just going to pick a customer. Let's just say this Sam Johnson guy. Really cool guy. It's in QuickBooks, so it must be true.
I hear he likes to golf too.
Oh, he might have taken a golf day yesterday because it's beautiful out. So I've got all my customer history, payment history, all that good stuff. He just bought a couple new clubs actually, so I'm going to send him an invoice. So new transaction invoice. If you're familiar with QuickBooks, which I know a lot of you are very familiar with QuickBooks, you'll notice this is the exact same thing that you're used to in here. We're not reinventing the wheel. So I've got my invoice page here. I've got my terms. For this one, I'm just going to make it really simple and make this due upon receipt. I want that money as quickly as possible. No term policy with these guys. And let's drop in a few different products, right? These can either be imported directly into QuickBooks. They can be directly imported into our Trace AR platform, either or. The cool thing about this is that when we utilize Trace AR and QuickBooks Online, there is a true two-way sync. So any payment made on one platform, any items uploaded into one platform, customers imported will be immediately synced into the other one. So redundancy in financials can be good. We want to make sure that nothing's slipping through the cracks.
Yeah, that's huge. I think especially for small and mid-sized businesses too, Sam, that, they want to grow their customer base quickly. In many cases, they are adding new products quickly. And so any sort of delay that makes it difficult for them to process payments or keep their accounting financials up to date is a point of frustration, right? It's a point of friction. And so that real-time connection is huge.
Absolutely. So with this, right, I've got my invoice kind of laid out how I wanted to, just a couple different golf clubs. I can add my custom messaging, all that's still in play. And what I'm going to do is I'm just going to save and close this. If you've sent out invoices within QuickBooks before, you might see it as save and send. We're doing save and close because we are linking up our platform to this. And if we do save and send, this will duplicate it with Intuit's payment solution. So we don't want to double that. We want to make that very simple. So invoice is sent. It's out there. What I'm going to do is to show you kind of what's going on behind the scenes is I'm going to pull up my Trace AR dashboard, right? This is not necessary, but it's kind of cool to see all the different pieces working together. So I'm going to do a quick refresh. And on my invoice dashboard, right, you're going to see outstanding invoices, paid invoices. So this is just another way that I can manage my payment outside of QuickBooks. Let me do one more to make sure that that one just went through. There it is. So like I said, it's a very quick sync. We've seen other platforms. It might take a couple minutes to get that in. As you can see, it took about 10 to 15 seconds for this to pass through our system. So one thing, team, that I really like about Trace AR is we have tracking. Right? When we think about digital invoicing versus paper invoicing, when we send that invoice in the mail, it's gone. There's a lot of trust that one in our postal carriers that they're going to deliver that in a quick and safe way, but two, there's a lot of trust in our customers that they're going to pay that. While we have that trust, oh wow, look at that real-time updating. I can see exactly what's taking place on all of my invoicing as I go through this. So I can see step by step down to the minute when emails were sent. In this case, this is also sent via text message. I have my client's mobile number hooked up to this, and I do have the setting to send a text message, which is nice. And I can see exactly when emails are clicked and sent and paid, and all of that is manageable within this system. So let me, in the background really quickly, team, I'm going to pull up the email that I just received.
Not that we probably hear it very often, Sam, but this takes away the, response of, oh, I don't remember seeing it. I didn't get it. Funny
We've
here.
never heard that before,
Yeah,
right?
never. Nobody ever hears that, right? It's
I
interesting. I see
trust
you've opened the
United
email
States
3
Postal
times.
Service. They usually get where it needs to go. I don't know why when it's invoices, they somehow keep disappearing.
Right. Imagine that. But none of
With,
those excuses apply here since you can
no,
clearly see.
not at all.
Yeah, that's
So
awesome.
with this, right, I just got my email. This is brandable, right? It's not going to say QBO demo. This will say the actual, right, your client's company's name, along with a logo. If they want to put that up there, we can match the buttons with their branding. So it's just going to reinforce, one, their brand, but it's also going to look like a trustworthy source. So everything's laid out in the email. I'll go ahead and click on this. Oops, and of course that's going to open up in a separate window. Let's drag that over. If we're using QuickBooks, it's going to take that same QuickBooks template that our clients are used to seeing from us, but we're going to make the payment experience much easier. So when I go to pay this, you will see multiple payment options. I have some stored options available already within my customer wallet that I can just grab, or I can just add a bank account, card number, right? We do support both card and ACH payments. So, right, which Mary, you say all the time, we want to meet our buyers where they are. I think that's very applicable into we want to allow them to pay in the way that's going to be simplest for them.
And as I recall from our poll earlier, Sam, many of our providers that are on this call today are very comfortable with ACH for their clients as well as they rated it the number one
Love
transaction
it.
source.
Let's do ACH.
All right.
So this is cool. I'm glad this actually came up. I wasn't expecting this. But with Trace AR, if there are any additional past due invoices that are associated with this, we do it kind of by customer profile. It will tell us, hey, this customer also, you owe another $500 for a previous invoice. Okay, sweet. Let's pay that off. Let's get that knocked out. Let's stay compliant with our vendors. So we're going to charge the full amount. Everything processed successfully. My invoice is updated. I've got my receipt has been applied to multiple invoices. Right? I'm going to show you multiple places that's been paid off within Trace AR. But more importantly, when we go back into QuickBooks Online, right, it will tell me that I did receive a payment for this and it's applied it to both invoices. So, like I said, team, really simple, really easy, especially for your clients that are using QuickBooks Online today and they're using this for invoicing. There's no disruption. We're only going to enhance that experience. So at this point, you're probably saying, well, why the heck would I use PayTrace, QuickBooks, Intuit? They already do this, right? 3 things I want to mention, right? One, we're going to enhance that experience a little bit by some of these tools, right? We're going to see the tracking. We have the ability to apply additional fee structures like surcharging, like cash discount, which are getting very popular in the payments world. And then in a moment, I'm going to show you our client portal, which Mary, I know you're very excited about.
I am indeed. It just makes it so simple, Sam. Makes it so simple.
Does. It does. But 2, right there, you're going to have a lot more price control over your payments. Intuit simplifies it in that they do a lot of flat pricing, which is convenient, but it's also typically going to be a lot more costly, right? We think of, Square is a pretty common name. They've got great technology, but they're going to charge you a lot of money for that. With this, you're still going to get that same convenience, but we're going to be able to work with, right, your clients on their price structures, on card acceptance, things like that. So we're going to make it make a little bit more sense for them. And then 3, which we'll wrap this up with, is support. And I'll talk about that a little bit more as we proceed. The last thing I'll show you within this demo is this tool that I referenced called Client Portal. And essentially what this is, and keep me honest, Mary, this is going to be the end customers, right? The buyer's portal where they can manage all of their payments. This is going to allow them to have more autonomy in viewing their histories, in managing their different payment methods. It's going to give them a dashboard so that they can view, kind of what our clients are used to seeing on their accounting side. So a couple ways this can be managed. Here's the preview of it down here. It is both desktop and mobile dynamic. But we can provide access to this to the end buyer via either URL, direct link, or if our clients have a website and they wanted to embed this client portal directly onto their website, they can do that as well.
Sam, for example, when you went to pay your invoice a moment ago, you saw that you had a previous one outstanding. Had you come into your client portal, happen to log in that morning or whatever, you would have seen that you had an invoice outstanding and that you could have paid it at any time. But the other thing I think about from a client and a CPA agency relationship is you're managing these accounts and many times for multiple clients. So to make it easy for them to facilitate, cut out the middleman, right? Make it easy for their clients to come in and pay. You are essentially getting the money on behalf of your clients as fast as humanly possible. They don't need to deal with AR and collections and follow up and making phone calls and all of that. It's a really simple link to be like, hey, Sam, looks like you got a couple outstanding invoices. Just log in here, take care of them. So it accelerates that customer experience as well. Sam probably didn't remember that he had an invoice out there. Had we called him, he probably would have said, of course, I'll go in and pay that. But this takes that interaction out of the equation altogether. And it really just puts the onus on the end client, but gives you visibility and gives your clients visibility to quick access as to what's outstanding.
Exactly. We don't want a majority of our calls to our customers to be trying to get money from them. We want it to be more relationship building. We want it to be more, more sales focused, not
value,
so
right?
Right, exactly, value focused. So, as you can see, this is what the end customer would see when they get logged in. Normally, I've logged into this recently. It's going to ask them for a phone number and email verification. We'll send them a one-time passcode, and then they get logged in. And as you can see, the customer actually still has one outstanding invoice that's due for $250. But everything's good. Nothing's past due. I can see all of my recent payments, including that one that we just made for $1,100. And then we can manage a few different menus on here. I can see kind of a different view of all of my invoicing history, all of my different payments, payment methods. I've got access to all of my receipts. So, if we need to reference a receipt from 6 months ago and it's like, oh man, I don't want to go digging through email. I don't have to call up my vendor. It's here, right? It's at their fingertips. And then we also have a secure wallet. Everything on here is PCI compliant, so we can add as many different cards, as many different accounts as we want to, so that we can navigate that buying experience how we need to. So,
which is another great point, Sam. I need to just interject there when you just mentioned PCI compliance and the way that we're storing those cards. Everything is secure to the extent that the client or you as their accounting firm never needs to interact with the card data, with the financial data. You don't even see it because it's masked, of course, from you. And only the client has access to that information. So it's all securely stored in our PCI compliant environment. So it really reduces the risk for fraud and any sort of security exposure that your business or your clients might have previously had to manage themselves.
Correct. And that is a very hot topic right now in the financial world is what can we do? What levers can we pull so that we never see a single credit card number in our business? We want to reduce any liability. And this is a great way, right? This is keeping it so that it never comes through. Sure, you can see the last four, but that's okay. You're allowed to do that. But really that's it. So in this case, right, balance is $250. I can see that outstanding invoice and I can just pay it off from my client portal.
Look at
right?
that.
Very simple
Taking
checkout
care of things in
experience
seconds.
in seconds. And again, because this is all connected to QuickBooks, that invoice, all that remittance is going to go right back into my QuickBooks account. And we can set up Trace AR to receive additional notifications. We can send out additional reporting. There's a lot of ways that we can flex this to make it work with your client's business.
And Sam, what if that was a like recurring payment or subscription type of relationship? What would that look like?
Yeah, no, great question. We love recurring payments. As we get into more, it seems like most businesses are starting to get into kind of a subscription-based model because they like that recurring revenue. So we do offer recurring payments options as well. You've got the ability to schedule, any sort of payment plans, whether that's installments, right? If we're working with a large transaction that we want to break down into multiple payments, we have the ability to do that. If we want to set them up for a schedule for till the end of time, till they tell us to stop doing it, like a gym membership, right? We can go ahead, build in a recurring payment on really whatever custom frequency that we want to, and for whatever duration that we want to. So we make that very easy to manage within the system.
Awesome.
Yeah. No, great question, Mary. All right.
I
So,
mean, I
of
would use it for pickleball instead of gym, but same difference.
course you would.
Let's go.
We've got the golfer and the pickleballer. We should
There
have
you go.
created a poll. What do you prefer, golf or pickleball?
We need a new poll, Amy.
Okay.
Maybe for the next one. So, with that said, right, I'm not going to spend the entire time just running through a demo on here, but we have some really great products, team. This is right. We're really focusing on the QuickBooks portion of this today. It is just really scratching the surface. We do also embed into other platforms, other ERP solutions, really all the kind of the major ERPs that are out there, as well as just offer this as a standalone product. So there's a lot of different ways that you can utilize PayTrace. All right, so let's talk about cost savings, right? We mentioned earlier, there's PayTrace is a great way to kind of look over maybe some card statements, monthly statements for your clients and see where we can make the most sense. There's a few ways that we can do this. I mentioned earlier, there's different fee structures that can be implemented, like surcharging, cash discounting, which are starting to gain some traction in B2B. While they're available, they are complex. They vary state to state. There's a lot of compliance rules around that. And of course, there's going to be kind of the relationship aspect. If we implement a surcharge on our customers, they're not going to be super happy about it. So while it's there, and it is a great tool for those that can use it, one of the ways that I like to lead with when it comes to cost savings, especially in card payments, is this thing called interchange optimization, right? I'm sure many of you are familiar with the phrase interchange. Essentially, at a high level, what this is anytime a business accepts a credit card payment, it's going to cost them some percent of that total sale in credit card fees. The largest fee of which is this thing called interchange. This is usually one of the biggest hesitations for businesses that want to accept cards, is because it's going to increase their costs versus check, which we'll talk about, or ACH. With this, though, what a lot of folks don't realize is that this is flexible, right? We have the ability to qualify these rates at different percentages. So when a lot of businesses that accept cards are used to seeing numbers like 2.7, 3.15%, and then some, right, on their card expense, PayTrace actually has the ability to reduce card costs down to the lowest attainable rate. And specifically, this is really applicable to B2B. So anytime our clients are accepting things like business cards, commercial cards, those virtual cards that Visa and MasterCard have been issuing like crazy, right? These are all eligible, usually for lower rates than what we're seeing typically. So when you look at these numbers, if we can take, one of your clients to maybe they're paying 2.7. We can get them down to 1.9, right? That's 80 basis points, 0.8%. If they're taking tens of thousands, hundreds of thousands of dollars in credit cards on a monthly basis, that adds up very significantly, right? So there's a lot of levers and things that we can pull to make sure that we are optimizing our clients' expenses, right? So that they're paying the right price for them. Because when you think about it, our buyers want to pay by card, right? So we want to meet them where they are. Mary, anything I'm missing on that one there?
I think you closed with what I was going to add, and that is just going back to that whole make the experience connected for them, give them the payment options that they want, and do your best for your clients to be able to save them money where possible, create efficiencies where possible, and credit cards aren't going away. These types of payments aren't going away. They're only going to increase. And as consumers, whether that's personal consumers or business consumers, we're only going to want to increase the places that we can do business with based on that. We don't want to have any holdbacks or limitations in how we can pay based on what we're buying or who we're buying it from. So I think it's just, goes back to that connect the buying experience for the business buyer as well.
Agreed. All right, Amy, I think we're gonna queue up the very last poll on here. I think this is a good time for a reminder if you were paying attention at the earlier slides, but on average, how much does it cost to process a single paper check? Right? Is it a couple bucks? Is it $100? 11 to 15. Let's see if you remember this from Mary's conversation earlier. How are we looking, Amy?
0 to 5 is number 1.
Oh no.
$23.46.
Two people, two people pick 20 plus.
Yeah.
Thank you for paying attention.
Yes,
No,
thank you.
It's all good.
So this is a reminder because, again, when we think about the dollars and cents, it's really easy to see a credit card statement and see monies that's coming out of the bank. This is an expense. You don't see that check fee on a balance sheet, on a spreadsheet, right? But realistically, Mary, right? $23.46 is the average cost per paper check.
Mm-hmm. And I think where that, really adds up, Sam, is that frustration that you were talking about earlier with, teams not having technology and cutting edge. And especially, as accountants enter the workforce, maybe they're coming out of college, all they've known is digital tools and mobile apps and digital experiences their entire life. The last thing you want to do is introduce them to a system and a process that depends on something they've never really had to experience, managing
Right.
paper. I mean, when my youngest son bought his first house at the age of 25, he didn't even have a checkbook. He was like, what do I need? They tell me I have to show up to closing with a check. Mom, I don't even have any checks, so that experience is not lost on me, and it shouldn't be lost on us from a business professional perspective either. When we're training people that have never had to deal with paper or checks or manual processes that maybe have been part of some of our lives for quite some time, as we evolve into the digital economy and depend more and more on digital payments, we don't want to take that away from the people that we're hiring. We want to give them the technology and the tools that they're used to so that they can be the most productive as possible, so they can help your business make better decisions and use it, make those decisions based on the data that we're sharing with them and that you're providing for them as their trusted advisor and CPA firm.
All right. Well, let's just connect all the dots then. We've talked a lot about PayTrace. We've talked a lot about payment efficiencies, payment inefficiencies. So this is our value prop slide, right? This is bringing it all together. So number one, right? I think the big takeaway from this is getting paid faster. We want our clients, our users, to get money in the bank faster. There's a lot of reasons why, right? We want working capital. We want to be able to reinvest in our business. Borrowing rates are still very high, right? The Fed just knocked off 50 points. We love that, but it's still 5%. Wall Street Journal prime rate still 8%. So if we are having to finance all of our receivables, right, we're losing a lot of money. So we want to reduce that DSO. We want money in the bank quick. We want to accelerate those payments. On the flip side, right, we want our like we keep saying, we want our employees happy and we want them working on the things that's really important to their jobs, which usually shouldn't be um, going back and forth to the printer and going to the mail, right? We want their financial professionals. They're trained to be financial professionals. Let's let them do what they're supposed to be doing. Let's let them focus on how they can be more productive and really influence the business. Real-time visibility, right? This is native within QuickBooks. Our solutions are have tracking down to the minute. So again, keeping our customers accountable, no lost invoices. It's all digital, right? And security. Seriously, cannot stress this enough. I noticed we had a comment in the Q&A about scammers. They are getting extremely savvy, right? It's something, gosh, I can't remember the exact stat, but I want to say over 50% of all businesses at some point in the last 2 years have had some type of financial attack on them, whether or not it was successful. But it is becoming very commonplace, right? So we want to protect financial information by providing the highest level of security. So again, everything that we do is PCI compliant. All of the payment data that we work with is encrypted, and we're hosting it, right? We're removing that liability from our users. They're not having to host that data on their servers. Actual cost is very important, right? We want to drive down those actual real transaction costs as much as we possibly can while removing some of those efficiency costs. And then lastly, I referred to this earlier, support is so important. Mary, I don't know the last time you had to call out to an ISP or insurance, or I had to deal with a pharmacy not too long ago, and it took about half an hour to get my medications figured out, but it's very frustrating. It ruined my day.
I
We
understand.
we at PayTrace, we have an expectation that if our clients have questions, if they have an issue, right, anything revolving around money, you want to get solved quick, right, immediately. You can literally pick up the phone, call us. We'll answer the phone within 20 seconds or less almost every single time.
And
Emails are,
Sam,
yeah.
sorry, I had to interject. To that point, we hear from our financial professionals, CFOs that we work with on a regular basis, and research supports this as well, that 80% of CFOs claim that difficulty and challenges getting through to a provider or getting the right advisory services, product support is a barrier. 80% of them will choose to work with or not work with an organization based on how they can get feedback, support, help, advisory services when they need it. So definitely having that personal touch makes a difference. Again, back to that trust and relationships, it all comes together. It's not just about the payment, it's about the whole experience.
It is. It totally is. And AI is great. I think AI is there's a lot of ways that you can use it, but I don't think support is always the best way for that. We don't have chatbots. We don't have menus to dial through. It's real live people based in the United States that you can talk to. So it is a really personal human connection that we have. So you can't really put a cost on that. Is what I think is a good phrase for this. You come for the solutions, but you stay for the support. You stay for the experience.
100%. Sam, a couple of questions that have come in. I realize we're coming up on the top of the hour here.
Oh, wow.
Yeah, so I know. So somebody asked, why focus on B2B and not B2C? I think maybe you could share some insight into that.
I can. One is I don't like B2C, so I don't want to focus on that. No.
He's
B2C
kidding.
is
He's
great.
kidding. No, you've got a
I am
ton of great
kidding.
data for this.
I am kidding. B2C is phenomenal, right? As consumers, that's what we're familiar with. It's out there. But it is completely night and day from B2B. We can't be everything to everybody. So we want to be where we can for our clients. B2C for payment processes, they require a lot of hardware technology, point of sale systems, flexible batching, You know, they're batching out at 11 o'clock at night sometimes, you know. So there's a lot that goes into that. B2B, right? This is going to be much more back office. It's going to be much more embedded ERP accounting platform types of payments. So while there's definitely a space for B2C, it's just not going to be our bread and butter. You know, if you have anything to add to that.
Yeah, I mean, I would say that if it's a smaller percentage of an organization's line of business, then it's certainly something that, you know, we can support. It's just, to Sam's point, it's not our focus, primarily because of the complexities and the requirements in the B2B, higher value, higher volume, higher risk in some cases, because businesses have all of these other compliance requirements, et cetera. So I think the focus on B2B is an area that we've really built our business on. And PayTrace has been around for more than 20 years, and we have more than 40,000 customers that are using some elements of our credit card processing, our gateway, our accounts receivable automation solutions, and the like. So that focus area has really helped us build the credibility within the space of B2B companies that know they want to work with somebody that is going to take care of their transactions, take care of their money, help them save money, help them grow, and really be that platform that they can build their business on. So it's an area that we've chosen to focus on for more than 20 years. And that continues to be, as Sam mentioned, in ERP and mid-markets, where the SMB market and mid-markets are really lacking some of the solutions that they need to really tighten this up. So it's not that isn't great, but there's an opportunity and market out there and a lot of great providers that do that. It's a smaller slice of the business for the companies that we work with.
Yeah, and just we'll keep adding on this because you called out something. We're not going to turn away B2C business, right?
Right.
A lot of times when I think of B2C, right, I assume I'm thinking heavy retail, I'm thinking restaurant, convenience stores. It's not always the case, right? A lot of professional offices are considered business to consumer. I had some outpatient surgery not too long ago, and when I went to go pay that my copay at the doctor's office, they printed out my receipt. It was a PayTrace receipt, right? That wasn't a B2B transaction, but for them, it made the most sense to use PayTrace based on the tools that we had, the support that we provide, the user interface. So, you know, the professional office space, there's a lot of overlap. So I don't want to discount that entirely, I think.
Yeah, great point.
Hopefully that's fair.
Great point. Yeah, to your point a moment ago, there were definitely some comments and questions about cybersecurity and scam. I think you addressed that very well.
Cool.
Yeah. Great job.
Well, there's some longer questions in here. So Mary, maybe you can start reading those in depth while I talk a little bit about our partner program.
Yeah, go for it.
So where does this fit in with you, right? You might actually be a great fit for PayTrace for your payment processing, which we'd love that. Please, you know, let us know. But really where we fit in a lot with a lot of, you know, accountants, you know, CPAs, firms like that, is going to be more of a kind of a partner relationship, referral partnership. So we want to take care of your clients. We want to add value to your relationship and be a referral solution for you. So as you have opportunities, as your clients look for QuickBooks integrations, payment processing enhancements, right? They want that new technology that's going to make them better. You know, PayTrace is going to be a great platform for that. We do have revenue share opportunities there. So within payments, right, there's different revenue opportunities. We make money based on processing volume and technology. So we do have opportunity in a referral relationship for there to be a share with that. Mary, do you want to talk a little bit more about the partner programs that we have?
Yeah, I think it's really exciting to see the different types of partners that we work with. Sam, it's not a one size fits all program by any means. You know, we work with companies that want to take this technology and embed it in a solution that they're delivering to their clients. Maybe you work with other systems outside of QuickBooks and have something maybe custom, maybe an industry specific ERP, those sorts of things. The other area though is often a referral or reseller relationship where your clients need this type of solution, and you know, either what comes out of the box isn't enough, or they have requirements that significantly go beyond that, and or you think there's just a better fit for them with another product. And so you find that it's best for your organization and for your clients to recommend PayTrace as part of that. And so we have margins, we have co-marketing, we have full support. Think of us as an extension of your team when it comes to that. We do a kickoff call. We've got a relationship management team that's really going to help you, quarterback that entire process for your clients, as well as getting your team up to speed in terms of the sales process, discovery, and you can lean on us for that end-to-end experience as well. So the partner program has a lot of different variables. If it's something that you're interested in, certainly we would welcome a conversation around that.
For sure.
Sam, while you were describing the program overall, though, I did take a look at the other question that you were referring to here, and it really kind of addresses larger organizations that have a longer AP sales cycle, or AP process rather, where it, internally, like they just physically can't get a payment approved in less than 30 days or 30 to 45 days. And I've lived in that world. I know what that's like. One of the things, though, that we challenge those organizations to consider, whether it's AP or AR, you want to be able to control your cash flow, and you want to spend as little as possible on that cash flow from an outbound perspective, and you want to be able to make it as efficient as possible for both the payer and the receiver of those funds. And there are a lot of different ways to do that. Again, this might be let's take this offline and have a follow-up conversation around it. But, if you offer a discount to your clients that if they pay within a certain period of time, that's saving them money and getting you the payment faster. If you offer them a way to pay with cards, maybe over a recurring or installment-based plan, that also incentivizes them to have a little bit greater control over the cash flow. So I think there are a lot of different areas that, people, it's hard to think outside of the box when you're talking about finance and accounting, right? There's so many rules, there's so much structure that goes along with it. But certainly we have conversations with organizations all the time to help understand what are their options, and we'll figure out the best way and the best fit for your clients as well.
Perfect. I was going to kick that question over to you anyway, Mary. So you answered that perfectly. Thank you.
All good. I spent a little time in the AP world. I can handle that.
That was exactly why I was going to do that. Team, I know we're coming up on time here. If you have any more questions, please send those through for us.
Meanwhile, I'll launch the CPE.
Yes.
So let us know if you do need CPE credit so we can get that certificate to you. Please give us roughly a day or two to get them to you. We'll get them as quickly as possible, though. Appreciate it.
And while you are doing that, I will put up our, oops, my pen. Best way to contact us if you do want to have some more immediate follow-up with the PayTrace team is sales@paytrace.com is the best way to get in front of us. Please don't hesitate to reach out. Our team is ready to have those conversations to see where this could be a good fit. And we're open to those many different types of relationships, partnerships.
Absolutely. Or just visit us online, paytrace.net, paytrace.com. Either one will get you to our website to kind of dig in and learn a little bit more. But our team is here to support you. So let us know if you have questions and how we can help.
Exactly.
Yes. So thank you so much for presenting today, and we're excited to send everyone the recording. And if you have any questions, again, feel free to reach out to them, but we will be getting the contact information so they can, getting them all of your questions and answers. And your CPE. So stay tuned for all of that.
Thanks, Amy.
Thank you, everyone. Have a great day.